This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Joining us today is Eldur Olafsson, the CEO of AEX Gold, following news from the drilling of the Nalunaq gold project in Greenland. Now, the drill program comprised of 51 holes, with 33 intersecting the main vein and 27 intersecting gold, which is better than originally expected. And one gold assay result in particular, returning a grams per tonne of 139. So, hi Eldur, welcome onto Stockbox. Could you start by giving us a brief overview of this drilling campaign and what its objectives were?
Well, the objective of this drilling campaign was, well, first of all, I should say thanks for having me. But the objective of this drilling campaign was mainly to prove or get more evidence in and around how we build up resources within the Nalunaq project. There are particularities on the Nalunaq gold mine, which are obviously extremely high grade, one of the highest grade gold mine you find. But having that kind of a high grade gold deposit also has some challenges. And that mainly is the Nugget Effect, which I guess we'll speak about in a minute. But what we wanted to get is to get a very good understanding of how to attack the deposit with the view to increase resources. And we feel that we've gotten there with the success we have so far.
Okay, so when you've looked at these results then and analysed them, and then with the majority of the holes intersecting this main vein structure, how significant is that, and how does this define the next exploration stage?
Well, I should say that we just got the results. We had to kind of report them immediately. So our geological team haven't got a huge amount of time to analyze them. So we will be doing more analytical view and work on these results for the next month or so, together with our in-house team and also with SIK. But with regards to your question, what we can see very quickly is that when you're drilling these kind of a deposit, there are various different faults that changes it, and sometimes you miss it, sometimes you don't see it, etc., etc. But with the dolerite dike model, we have been managed to find a way so we are hitting the deposit every single time. What that means is that if I would just quickly share my screen to give you an idea of that, what that means is that with regard to the deposit itself, so this is what you're looking at here. This is the Nalunaq mountain. This is a flat view image of the Nalunaq mountain. This is all high up mountain. So this is from 300 above sea level up to 1300 meter above sea level. Okay. So this whole area here that you can see here, this is what we call has an exploration potential of 2 million ounces, the higher limit of it, right? But the exploration potential is not resources. So, you might have very high grade somewhere, very low grade somewhere. So you want to be in the high grade zone because that's most, commercial for you to mine. But we had never gotten a very good understanding until the last 2 years of where the high grade bits are and where the low grade bits are. And that's what we call this dolerite dike model. We've seen through drone survey dolerite structure that basically give these corridors up and down, like this one and this one, and this one and this one. So 5 zones which we believe are high grade zones. And why do we believe that? Well, this is a zone that was mined. These yellow lines are old mine workings. And this one here as well, and this one here as well. So we're essentially extending those corridors up and down, and also finding new one, which is the valley block. So you can see the size of this valley block that we've been drilling is equal to the size of the biggest mine block that was mined previously in the Nalunaq mountain. So knowing where to mine and be in the high grade bits is the key to make a very good commercial mining in this deposit. So by doing systematic drilling within these corridors allows us to build up mining blocks in each of these locations.
Yes, it makes sense. Yeah, so you're really beginning to understand the deposit here.
To greater depth, yes. So previously we would understand it in a way that we knew it was high Nugget Effect, we knew it was running on those, but to understand absolutely where the high grade bits are, it was very hard to determine from drilling. Now, when we have overlaid the dolerite dike model, and actually on top of that, we are starting to understand the effect of the nugget, why the nugget effect is that it is, and what that translates from a drill hole to a mine grade. And this is what we call a call factor. And what we do is that we take the drilling data previously that was drilled here, and we then see what they were giving in grade, and then actually what the eventual mine grade was. And then we can start overlaying those data here based on the similarity in data again. So a lot of what we are doing today is effectively because there's a lot more technology and understanding of how to attack these things and make it more commercial in terms of building up the resources there.
Okay. And does this tie in then to the progressive resource growth model that's mentioned in the news release? Could you explain what this model is and how it will drive shareholder value going forward?
Yeah, no, certainly. So currently we're drilling on average between, call it 30 to 60 meter spacing. We're trying to get to that spacing between drill holes, okay? So if you would look at this deposit here, we drilled this on this kind of a 60 meter space, this part of the valley block. We've yet to drill this part of it and down here. But effectively what we're doing is that by getting that spacing in each of these blocks, you're looking at maybe 20 to 30,000 meters of drilling that would have to take place, right? But knowing the diameter in between holes, knowing the call factor, knowing where to drill, we then have a path to start building up resources systematically, rather than just saying, oh, let's drill a bit here, or let's drill a bit here, let's hope for the best. Now we know it becomes like a sewing machine. That's what the aim is, and that's part of the analysis that we are now going into together with our geologists and SRK to understand all of that relationship, and therefore be in the position to essentially start increasing the resources systematically. And then, mind you, we're just going up the mountain. We haven't, the deposit continues underneath the mountain as well. So there's a huge potential still within the mountain. And in addition to that, there are other veins in the mountain that we haven't even started to drill. So the scale there is quite dramatic there as well.
Okay. Now you've mentioned this nugget effect then. Could you perhaps explain what this effect is and how it matters when resource modeling?
Yeah, so how it matters exactly, we need to determine with SRK. So that is the work that we need to kind of go through and understand. And the data will help us in that, both previous data, but most importantly, the drilling data. So we have to go through that. But to put it into perspective, if we look at the drilling data that were drilled here in the target block, then we are seeing in most of the holes that, you got 1 gram per ton, you were getting approximately 70 to 100% higher grade when you mined. So, you're looking at a much higher grade. And the reason is that drill hole is like this. This is a drill hole. So with a nugget deposit, not homogeneous deposit, you can very easily miss a nugget, right? Because this drill hole we cut in half, right? So if it's an accidental drill hole, and we only take one part of it. So we've sometimes seen visually a nugget in one part of the core that was left behind on site, and the other part went to the lab, and actually the other part came back with little or no gold, right? So this is the fact that we have to deal with and calculate correctly in the resource statement. But this is also why this deposit is 18.5 gram per ton. You don't find these deposits in the world any longer, right? So that's the beauty of it.
Okay. Well, just a final question then for you, Eldur. Just taking a look at the company's cash position, what does that look like? And what does the roadmap look like for the rest of the year with Nalunaq and indeed the other projects in the portfolio?
Well, we've yet to put out, so to answer your first question, the cash position of the company is 25 million today. So we're very well cashed up. We don't have any debt or anything like that. So we can take on various projects. We've already built a camp on site. So we have drill rigs on site, and everything is ready to go, so to say. What we are, and we have people on site now maintaining and keeping everything in order on site. With regards to next year's program, what we are making sure is that we're planning for a program, because that's what you have to do in Greenland, that you have to plan right now. But we are also allowing the results to give us an idea of what the next steps are, not only for the Nalunaq drilling, but also for the wider portfolio. And the wider portfolio consists not only of gold, it consists of copper, nickel, rare earth metals, and so on. But those are all results that we will be putting out in the market in the next 4 to 6 weeks, on a weekly basis. And that will all stipulate how we will go about increasing the value of the company going forward, moving these assets from either a discovery or an idea discovery to resources. That's the key.
Okay. Well, Eldur Olafsson, the CEO of AEX Gold, thank you very much for your time.
Thank you.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.